When it comes to wealth accumulation, the key distinction lies between assets and liabilities. While assets are the forces that generate income, liabilities are the factors that drain your resources. In essence, the more assets you can acquire that actively bring in money, the greater your wealth will grow. In this video, we'll uncover 15 wealth-building assets that are helping the wealthy grow their fortunes. Let's dive in. Number 1. Cash, the foundation of opportunity. Let's start with the most basic yet powerful asset, cash. Whether it's sitting in a bank account, earning interest, or stored as liquid wealth, cash offers unparalleled flexibility. While today's interest rates barely outpace inflation, wealthy individuals always keep substantial cash reserves for two main reasons. Reason 1, opportunity seizing. Wealthy people often keep cash available to jump on investment opportunities as soon as they arise. Without cash in hand, the chance to act on a prime deal can slip by. Reason 2, higher returns through cash deals. Cash also gives the upper hand in direct negotiations, as those offering cash often get better pricing. Additionally, you can participate in high-interest lending programs such as peer-to-peer lending. It's where you loan your money to others in exchange for a higher return, ranging from 7% to 20%. Number 2, real estate, the cornerstone of wealth. Real estate is a long-standing favorite for building wealth. This asset works in two significant ways: rental income. Whether you're renting out residential or commercial properties, tenants pay you rent every month, creating a steady stream of cash flow. Appreciation. As populations increase and demand for housing grows, property values naturally rise, allowing you to sell at a higher price down the road. Popular real estate types include residential properties, houses or apartments, and office spaces where businesses rent, and commercial spaces, stores, shopping centers, and land that can either appreciate over time or be developed for profit. It's essential to note that the house you live in is not an asset. While it may appreciate, it also costs you money with no direct income return. Number 3. Bonds, low risk, steady returns. Bonds are essentially loans you give to governments or corporations. In return, they agree to pay you regular interest. Bonds are relatively low risk, especially those backed by the government, though the returns usually sit around 3% annually. Investors can purchase bonds directly or through brokerage firms. Though the returns may seem modest, they provide stability and are a safer alternative to riskier investments. Number 4. Stocks, owning a piece of the future. Stocks are a popular and accessible way to own part of a publicly traded company. When you buy stocks, you essentially become a partial owner of that business. If the company grows and prospers, so does your investment. However, stock picking can be risky for beginners as the stock market is unpredictable. A better strategy is to invest in mutual funds, or index funds, which aggregate many different companies into a single investment, reducing risk and increasing the chance of returns. Number 5. Mutual and index funds. The safest way to diversify. While stocks offer ownership in individual companies, mutual and index funds allow you to invest in a diversified portfolio. Index funds track major market indices, like the S&P 500, offering exposure to the top-performing companies, thereby minimizing risk. Mutual funds combine multiple assets, which can be actively or passively managed. Index funds have historically provided strong returns, with the S&P 500 averaging nearly 10% annual growth over the last 90 years, making them a safe and reliable wealth-building tool. Number 6. Equipment, the power of tools for profit. Anything that helps generate income or improves efficiency can be considered an asset. For instance, a tractor for a farmer, a laptop for a programmer, or a decardon for an Uber driver. When an item aids in creating wealth, it's an asset. However, if your car is a personal one with no direct income relationship, it's a liability. Number 7. Patents, protecting innovations for profits. A patent protects a new invention and can turn an idea into a money-making asset. When companies use your patented invention, they must pay you royalties, offering a continuous income stream. Some patents have made inventors incredibly wealthy, such as the Slinky Big Mouth Billy Bassel. It's an asset class that can turn creativity into cash. Number 8. Trademarks, safeguarding your brand identity. While patents protect inventions, trademarks protect your brand, logo, or name. By trademarking valuable elements of your brand, You can license them to other companies, earning passive income whenever your intellectual property is used. A prime example is Untact Michael Buffer, Sagaz, who trademarked his famous catchphrase, "Let's get ready to rumble." Every time it's used, Michael gets paid, making it a recurring income generator. Number 9. Brand and goodwill, building emotional connections. Brand refers to the image a company projects, while goodwill reflects how the public feels about that brand. Both are intangible yet invaluable assets. Brands like Apple have built massive reputations through quality and consistency, while goodwill arises from customer loyalty and positive interactions. Companies with strong brands and goodwill can weather storms and drive sales without spending excessively on marketing. Number 10. People, the ultimate asset in any organization. People drive businesses forward. From the CEO to the employees, the talent within a company is what makes it successful. When you hire top talent, you're investing in the future of your business. Additionally, companies often acquire other firms just for the intellectual capital and talent they bring, as seen in the tech industry's acqui hires. Invaluable employees are often irreplaceable and can become the biggest asset to any organization. Number 11. Raw materials and commodities. Profit from fluctuating markets. Investing in raw materials such as gold, oil, or timber can be highly profitable, especially when the market price increases. Commodities can be bought when prices are low and sold when demand drives the price up. Wealthy investors often stockpile commodities to maximize their profit potential. Art, luxury cars, and rare collectibles also fall under this category. These items often appreciate in value over time, making them attractive assets for long-term investment. Number 12. Information and digital content. Monetizing knowledge. The digital age has made information a sellable asset. Books, digital courses, songs, or even blogs can generate massive returns. Once created, content can be distributed infinitely, offering a long-term revenue stream. The best part? You only need to create it once. Songs like Gangnam Style earned millions for Psy, while iconic songs like Mariah Carey's All I Want for Christmas generate millions every year in royalties. Number 13. Royalties earning from creative works. Royalties allow you to keep earning from your intellectual property over time. Whether it's music, books, movies, or inventions, royalties keep the money flowing long after the initial creation. Take the TV show Friends, for instance. The actors continue to earn millions each year from reruns thanks to syndication rights. Similarly, George Lucas earned billions from Star Wars royalties by retaining merchandising rights. Number 14. Unique rights. Gaining competitive advantage. Some assets come in the form of unique rights, which provide businesses with an exclusive edge. For example, Native American tribes have exclusive rights to run casinos under specific regulations. Tax exemptions for churches also offer unique business advantages. Understanding and acquiring such rights can give a business an unfair advantage, helping them maintain a leading position in the market. Number 15. First mover advantage and proprietary models. Innovation pays. The final asset on our list is innovation. Whether it's creating a new business model or launching a groundbreaking product, being the first to market often provides a competitive edge. Netflix revolutionized streaming, and Airbnb disrupted the hotel industry. Those who innovate and capitalize on new opportunities often reap massive rewards before others catch on. By strategically focusing on these 15 assets, you can build a wealth-generating portfolio that compounds over time, ensuring financial freedom and success. Which of these assets will you focus on to secure your financial future? Comment below.